Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at gold and silver using the CFDs on gold and the SLV ETF. It's only going to be a quick update for these as nothing's really happened in the last week. The count I put out and the discussion we had last Wednesday is basically the same as where we are today, so everything still applies. So I'm going to do a quick 5-minute update on those, as there's very little to update, and then I thought what we could do which might be more interesting is come in and have a look at a few individual gold and mining stocks that I've picked out, which I think could be interesting. Now, in no way is it a recommendation for you to go and buy these. I'm simply saying maybe it's a recommendation to just put them on your watch list. And if you're a member of the Green Star Trading Patreon and you know about looking for STS setups, then perhaps consider putting these on your watch list as well, as we wait to see how things develop in the coming weeks and months and potentially see some longer term macro plays developing. Could be the case, but that's why we wait and see what's going on before we make a decision. Either way, the area we're talking about here in the mining stocks I think is so hated and so beaten down, as several areas are across the broader market that aren't growth, that aren't tech or aren't growth. So I'm not saying that there's going to be a shift anytime soon or a serious rotation anytime soon. My own views on the stock market, I've expressed that we continue to believe that we are in a bull market and heading higher until we see evidence to the contrary. I have a very bullish long-term count, but a rotation at some point on a more significant level I believe is going to occur, and there are a lot of areas that are absolutely hated at the moment which are getting no love, no affection, and there are some really solid stocks and solid companies in there which are just not getting any attention. So we'll come across and have a look at those in a little while, but first then let's get underway and have a quick update regarding our gold and silver counts. Okay, so here's gold on the day time frame in arithmetic scale, and as we covered last week, we're still sticking with the bullish count until invalidated, unless invalidated I should say, and that's the idea that we've finished in a primary wave 4 up here. We had 5 waves up into a 1, zigzag down into a 2, and then we've gone up into a minor wave 1, and we've had an A, B, C that's underway for a minor wave 2 as a running flat. The zigzag here is much quicker to complete than the flat pattern, although the flat pattern is taking up more time than a wave of greater degree. But I think in this case, since we are talking about comparing a more complex correction to a simpler correction, we can give it that time to complete. Now, if we do come down and break this invalidation point, 1680 spot 31 I make it, which is essentially this previous low here, if we break that, this bullish count is off the cards, and we'll have to consider the bearish alternative, which we'll come in and have a look at. So first things first, having had this run up in a 1, and we're saying A, B, C, A, B, C, B, and then this looks like potentially 5 waves down, 1, 2, 3, 4, 5 could be to here, could be complete at the 50% fib right here, and now we're coming up in an impulse and we're going to come out of here. That's one way of looking at it, but looking at the size of this wave here, maybe this is its counterpart here in the 3, 4. So we've gone 1, 2, 3, 4, now we're going to come down in the 5, find support a little lower near the wave A low, maybe a little bit beyond it, and then we're going to come out of here. If we don't do that and we break this low down here, then all of this is wrong essentially, and more likely to be the bearish interpretation. So let's just come down to the hour time frame for a moment and have a look at the extension here of this 1 to find this 3, see if there's an argument for it to have completed. So let's take this as a 1, project it from R2. You can see that the 1618 is here, alright, and we are suggesting the 3 could be down here. So this is a very big extension here. So what we're going to have to do is bring up wave 3 Fib Extension here. So we've gone past the 2618 here, and we've come straight to the 3618 and found the low. So this is about as extreme as we'd expect a wave 3 to get. Okay. Now it could go to that 423.6, which is like what I consider to be, you know, it's not a cut-off for a wave 3, so far as about as extreme as we'd ever expect one to get. Okay, there are exceptions, such as the crypto market, but that's why we have log scale as well, isn't it, to accommodate for these extreme swings. So there's also an argument to suggest that it's already done, right? That we've got 3 here, and then we've had 4 here, or maybe here, and maybe this is a diagonal finish. Okay, that could be a diagonal. So since we're just thinking about it, let's throw it up here and say, you know, 1, 2, 3, 4, 5, diagonal completion, minute wave degree, and maybe this is the 5 down here, and we finished at the 3618. Okay, which puts the wave 3 at this degree. Maybe this is an expanding flat. Let me think. 1, 2, 1, 2, 3, 4, 3, 4, 5. So this is more likely the 3, and this is more likely a zigzag. So if this is 1, 2, 3, 4, 5 diagonal completion, ending diag, then maybe we're coming out of here already. But we don't seem to have a clear impulse here. That's problematic. This appears to be a 3-wave structure. Bum, bum, bum. Rather than 5. Maybe you could squeeze an impulse in here. Flat pattern here. 3, 4, 5, 1, A, B, C, 2, 1, 2, 1, 2. Building an extension, possibly. It's very iffy at the moment. We want to see, if that's going to be true, we want to see us come all the way back up here, take out the bottom of the wave 1 here, and cancel out the idea of there being some insanely deep wave 4. Highly unlikely for that to be the case in terms of coming up that far and still being corrective. If we start to impulse out of here more obviously, get a nice extension off of here for a 3 maybe, then we can say, well, let's take this length here, assume this is a 1, measure it, here's the 1.618. If we come up to somewhere up to the 1618, the 120, 123.6, 130.18, and then we roll over, that's more likely corrective, and this is 3 and this is 4. But if we come up to that 1618, okay, or maybe break it, then it's more likely impulsive. Okay, and we're done down here. We can look at our indicators and that to help give us some clues, but there's a possible completion already. It's also possible that we got a very deep 3 here, and this is a diagonal and a 3. And as I was saying at the 3618, we're going to come up into a 4, and then we're going to flush down into a 5. That's also an option as well. Alright, so for the meantime, still supporting the bullish count until those lows break at the invalidation point down here. If those lows break at the I always sound pessimistic, don't I know. I think I am naturally very pessimistic. I think it's probably the safest way to be in regards to trading. I always prefer to expect the worst. I hope for the best, but I always expect the worst. You know, so I always like to be psychologically a little pessimistic. That way I'm never shocked or surprised if things do go the way of that pessimistic thought pattern. If they go the opposite way, then I'm always going to be hedging on the side of caution in that regard. But as long as you're patient, you can get the kind of setups you want. So I don't know, I prefer it than being optimistic and assuming everything's going to work out all the time. That's not me at all, I'm afraid. Alright then, so there's our bullish count, and let's now have a look at the bearish idea. So what we're going to have to do is just grab this idea of an ending diagonal, throw that in with the primary count down here so we can get it out of the way. So the bearish count idea is that it's still 1, 2, 3, 4, 5. Could be in, could be a little lower, just as we discussed with the bullish count, except we are bearish overall. So if I just zoom out back to the top, okay, then the idea here is that we've had a big diagonal starting back in August 2020. That brought us down into an A. then we've had a swing into a B, then we've had a 1 with a 3 wave swing W, 3 wave swing X, 3 wave swing Y into a 2, and now we're impulsing down lower, and all we've seen so far is the start of a 1, we'll come back for a 2, then we'll break all of this low of these structures here and continue to thrust lower. Okay, so that's the bearish idea. So let's delete all that. So really we're still just waiting for these lows here to break. If these lows break, then it's game over, I think, because we've had a double bottom here, we've had a retester within a tick or two here for an incredibly deep 2, incredibly deep. Okay, and the only reason I've gone for the zigzag here is the alternative is to look at it as 5 waves and 3 back into a 2. I discussed that last week, so if you're confused as to why I'm not doing that, that is valid, okay, for a 1-2, but I just prefer the structure as a 3 rather than as a 5, which I don't think looks quite as good, but they're both okay. If you count 5 down here for a 1 and 3 back for a 2, you've got an easier count than the one I've interpreted here. I just don't like the structure, that's all, but it's totally valid, so that's fair enough. So if we come and rip roaring out of here, we can be a bit more bullish, and we'll keep an eye on how it develops, but continue to support the bullish count until proven otherwise. I don't see any reason why not. We've been going sideways for so long, the overall move down over such a long period doesn't feel impulsive or feel to be accelerating to the downside at all. Everything still feels overall corrective to me. Whether or not we have completed and are working up on an early impulse, generally the whole thing just feels like sideways correction. So let's now bring back up the primary count for a moment before we move on to do an even quicker update of silver, because there really is nothing to talk about at the moment. Okay, come out to the daily. Okay, there's one other pattern to discuss before we leave here, which I mentioned last week, which is the idea of a triangle. Okay, did I have 2? For some reason I seem to recall having, oh, that was the alternate bear I just mentioned, that if you did get 5 down into a 1, I'm sure I had an alternate interpretation of a triangle. Let's just have a read through these. Oh yeah, I have. Yes, that's it. So the triangle I came up with a long time ago and originally shared was this one here. A, B, C, D. We'd have to move this to here. Okay. Really we should only be using the B and the D here, so this line change that up. I think we've basically got the same thing, and we're going to come down one more time into a slightly higher low, into an E, slightly higher than this, slightly higher than this, and then it's going to be over, and this whole thing was 3, 4 as a triangle. Okay, and then the alternate idea to this triangle was, nope, Tom, that's the same thing. Oh, I did have an idea. What was it? Oh yes, I remember. Sorry, excuse me. Let's just get rid of this. We can leave it as it was. So what if all of this is an A? Right, and then we've got our triangle in here as a B, and then we're going to have a C. I think that was it. The reason I think I thought that was the flat line of what would be a barrier triangle. So we take these lows here, right, this is our barrier and this is our descending trend line, like this, and in that case we get a barrier triangle. So we have our trend, we have our first reversal of trend, which is A, then we 3 waves into a B, then we 3 waves into a C, then we three waves into a D, and that way we get our D and our B and our D along the flat side of what we call the barrier in a barrier triangle. That is as Elliott drew it, that is as Elliott wrote about it, and that would be the convincing downward, what people call a descending triangle, but it's actually a barrier triangle, and we end up with the B and the D on the flat side of it. So then you would come up for an E, and then you would finally flush down in a big C, and this whole thing was A, B, C. So there's another alternate. So I don't know why I didn't add that, so we'll add that now this week as a bearish triangle. So let me just label this up. A, B was going to be over here, C was going to be down there, much probably lower obviously. We've got our flat side for our barrier, and then we've got our slope, okay, for our A, C and our E, something like that maybe. Okay, then the internal structure would be a three-way swing into the A, the B, the C, the D, the E. Here's the B. Move this down into minor, move this into intermediate, like that, and then essentially expecting something like, if this is 5 waves, right, we were talking 5 ways bullish or 5 ways bearish, both ways. So let's say you come down here in 5, you come back and another move, you come down, there's another zigzag, then we get another zigzag, or maybe a complex, because this is D and this is E, could be double zigzag, and then we continue down in a C, and we just got longer to correct. So we'll save this idea as bearish triangle. Okay, and that's enough for gold now. So I'm still going to support, in the meantime, the primary count, this idea that it's 1, 2, this is WXY to 4, this is 1, 2, 1, 2, but we've got plenty of options now if this low breaks. So if that low breaks sooner, then it's more likely a big ABC. If we come back up and then down and then back up, then it's more likely the bearish triangle, but it gives us options either way. Okay, it's all about what the price action does in the meantime. If the price action, let's just sum this up. Oh no, I'm talking for longer than I said I would, but right, we've got high here, descending high here, and we've got the flat here for that triangle idea, right? So if price comes back up and takes out this high and this high, that's game over the triangle idea, right? So that's how you invalidate that. That's that done with. So nice and simple, you'd eliminate that idea. Everything would continue to look way more bullish at that point, and the primary count is more likely right. If we come down quickly in here with a 1, 2 potentially and break these lows, then we break the bottom side of that triangle for the A, B, C, D. It's gone lower than these. Can't do that, so it's no longer a triangle there either, right? And therefore the zigzag is more likely, and that's it. So you've got two things it can do, which will cancel out both of those ideas and confirm the other. So we just have to wait now and see what happens. As far as our indicators go, let's have a look at a few things here. Trading around that moving average ribbon, we love doing this, have been doing it for months. Currently just above the 10, the 250, the 60 and the 10 are all mingled together, all travelling sideways, waiting for some kind of decisive move. You know, it's consolidatory, you know, and therefore it could break either way. When I look, and I'm not expressing an alternate a bias here to the alternate, I'm just saying that when you see them move down and then move back and all this coiling, you kind of feel like that's going to be the next move, but can't call it until we see it. Alright, now let's just trading around our point of control and the volume profile, all this noise. And what have we got here? We've got rising lows in the MACD. Okay, the MACD supports the idea of a triangle quite nicely actually. You know, you've got successive higher lows and you've got successive lower highs. Supports the idea of it being a triangular pattern. RSI maybe. Depends how big it is. You know, depends how big it is. If it's the longer term one we were talking about, then yes, maybe the RSI is working its way into a triangle. Although this peak here, well, this isn't a peak, it's this peak here, so arguments there as well that are valid. Alright, but no bullish divergence to speak of, as we haven't set lower lows with higher divergence. We've just got rising lows in the RSI, rising lows in price currently. So yeah, we really have to do to wait to see now whether we break these levels here, or if we continue to free wave in a contracting pattern. Take out these highs, this high first, then we can start to have hope that it's the bullish case. Take out this high and we can have confidence that it's the bullish case. Alright, take out these lows, it just depends how we do it. 3 waves down, 3 waves back, then down, it's the triangle. Okay, in which case A, B, final 5 waves down, and the C. If we take out these lows before filling out that structure, then it's more likely the A, B, C, and this was, you know, 1, 2 instead of 1, 2, 3, 4, 5. Okay, so let me get that right. A, this is B, that's right, sorry, B, and then we went 1, bump, 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 2, 1, 2. Yeah, we'll come down without any further swings if this is bearish like that. We won't come down 3 and then back and then 3 and then back. We'll just come down, take out these lows. So yeah, this is the thing. This is what happens when you're ranging. You get ideas, but you have to wait to see these lows and these highs of these contracting patterns get broken, and then you can start to make a decision. Alright then guys, that's gold. Hopefully one of these weeks there'll be something more significant other than just going sideways to actually update you with, which helps us make any of these decisions. So let's come over and have a look at silver. Right, so I'm not spending half as much time on this. I still haven't got a bearish count that makes sense to me. I'm working on a couple of ideas, but nothing I'm going to pull out into the public space yet. The idea that this was all a giant diagonal, okay, fell apart when we appreciated that if we wanted it to go deeper with a 3 here and then a 4 because of an overlap here of our 1, if we wanted it to go deeper, then the 3 had gotten too long relative to the 1 to be considered a contracting pattern, to be considered a contracting ending diagonal. And it's not an expanding ending diagonal either. It simply doesn't have the shape of one. Okay, and if this is our wave 4, it's smaller than our wave 2, and therefore it's not an expanding pattern. Alright, the 4 would have to be deeper than the 2. So if we were saying 1, 2, 3, 4, 5 to get lower, doesn't work as a contracting diagonal, doesn't work as an expanding diagonal because the 4 is not big enough. Now the only way we could get an expanding pattern would be if we've gone 1, 2, 3 is longer than the 1, and then the 4 does that and becomes bigger than the 2 but doesn't go beyond it, and then we get 3 waves down into the 5. But until we see that bigger 4, we can't assume it's an expanding pattern, and therefore I can't really give you anything at the moment, because the only other thing we discussed in last week's video was the idea that this was a diagonal into a 1, this is a 2, and then this is a 1, and then this is a 2, and then this is insanely bearish, and it's just going to absolutely implode. Alright, so once again we're tracking what could be a expanding diagonal, sorry, excuse me, an expanding flat or a running flat in this case. No, sorry, I was right the first time, an expanding flat. We've gone 1, A, B, C. Now we need to do this. If we break these lows, 19.84, right in this null zone in the volume, we've filled one gap, right, we've come down right to here, which is filling this gap here. We've got this gap beneath us, this gap beneath us as well. Break these lows through this zone here and I see nothing stopping us from just flushing down. Okay, now at that point, what the hell is it? Well, we'll worry about that if and when it happens. Like I said, I'm working on a couple of things yet, but I'm not really ready to present them, so I'm just sticking with this idea until proven otherwise. Same with gold. And that is unfortunately all I've got for you in silver so far as the Elliott wave count goes. Now if we bring up our indicators here, we can see that the MACD is starting to cool off. Okay, we put our foot on to the downside, and now we're taking our foot off the gas. But we haven't got a buy signal yet, we haven't crossed over, we haven't seen green bars on the histogram, and we're still in negative territory below the zero bound. So easy to come down here and then just do this again. Okay, until we see an actual shift from bearish to bullish momentum supported with a buy signal, then we can't really be jumping to conclusions. But if we do get that buy signal here, crossover, and we see some green bars coming up on the histogram, and they're more impressive than this, and they look something more like that, you know, then maybe we can start getting our hopes up, start thinking that we've bottomed. No bullish divergence near this low at all currently. I think it's just a low, deep into oversold, however, but that's never enough to just buy something. So this here really needs to prove itself, right? So if we have come down in 5 waves in a C, so we've gone 3 here, and then we've gone 3 here, and then we've gone 1, 2, 3, 4, 5 to here, then we need to go 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, and a big 3 taking us up, smashing this B wave high here. If we do that, we can start to be much more confident. Now, it's one of those situations that we've seen a 5-wave move up and a potential 3-wave pullback. So if you do get a reaction on a smaller time frame here and you're a member of the Patreon, you know what this is. This could be a potential STS, and then this could be a stop down here, and you can set this trade up in the safest way possible. But you know, we didn't get divergence at the lows. It's not ideal, is it? It's such a deep correction, but it's not ideal for that setup. It's ideal in terms of limiting loss, it's ideal in terms of safety, but it's not ideal in terms of confidence. And it's always a trade-off between safety and confidence at the end of the day, isn't it? So that's silver, and I don't think I've got, there's no, that's another thing, we'd want to see the volume come in to support any bullish move off of the low, and there's no sign of it showing up yet. So maybe next week we'll have something to share with you guys that actually has been decisive, but for the moment we're just waiting. Okay, excuse me, just having a quick sip of my coffee. Let's come over and have a look at some of these mining stocks then, shall we? So I've just got a bunch here. I've got Kinross Gold Corporation, Shanta Gold Limited, Centamin Public Limited Company, and I've got Hochschild Mining PLC. So all I really want to point out here, because I don't want to spend too much time talking about these, is just how thrashed these things are. So if we look at Kinross Gold, for example, and we take from the high to where we currently are, we're trading 81% down from the all-time high price back here in January 1996. Now, where's the gold market relative to 1996? So this is one seriously beaten up stock. Let's look at Shanta. Now let's have a look at this, to where we're currently trading. We're down 87%. Let's look at Hochschild, and let's take the high here. We're currently trading 83% down. Now, like I said at the start of the video, I'm not saying go out and buy these. I'm just saying I've looked into the balance sheets, cash flow statements, income statements of these companies, and they're all sound, stable companies, right? They're not garbage that have been beaten down because they're overloaded massively on debt, or they've got extreme risk. You know, they're just unloved. I mean, seriously unloved companies. Some big, some small. Just curiosities regarding technical setup. So if we just look at like Kinross here for a minute, we've got what looks like a three-way swing here to a low, a correction which has taken like 7,189 days. So like a long time. So you could argue for cycle wave correction here, primary at least, but cycle wave correction you could argue for here, having had a lower high. And then we've got some kind of move to here, and then here to here. Could this be 1, 2, 1, 2 coming in? And then off you go. It's possible. Not saying it is, but if you're familiar for looking for the standard trade setup, then maybe this should be on your watch list and keeping an eye on it, because the day's going to come. Right now, at the moment, we're seeing no divergence around these lows currently. If we were to come down and set another low, and we had divergence here, and we've got another low in price, that could be interesting. Especially if we get a reaction off of that low. Now if we come over and have a look at like Shanta here for a minute, we've got potentially the same situation. We've got a correction from 2006 which looks like it's potentially 3 waves, and then we've got a move up and a move up. Okay, potentially interesting again. Now we haven't seen what we want to see, which is for to come out of the RSI here, to momentum to turn around, to get an impulsive move up and back, which breaks trend, supported by volume, yada yada yada, all of those things. But once again, worth keeping an eye on. Now if we take Hochschild here, I don't know why I'm not using the ribbon on these ones. Let's just use the ribbon here. I'll save it. Okay, turn that off, but now it's there. So here's one where we're displaying extremely strong divergence on the weekly time frame, bullish divergence. Just got a series of lows, right? But in the RSI, we've got a series of higher lows, even though we've set lower lows across this period here. Low, lower low, lower low, high, low, higher low, higher low. That's quite interesting. I mean, what is this we're looking at? Is this the 3 wave move here? I can see 5 waves here, right? And I can see maybe 3 waves here. So maybe this is A, maybe this is B, and then this is 1, 2, 3, 4, 5, and then maybe this is 1, and this is A, B, C to here, to here, to here. Maybe we're doing something like that. Alright, so we come up here, this is a 1, bum bum bum, bum bum bum, bum 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 bum. Again, potentially. And we're going to get a 2. It'd have to be before this high. We're going to get a 2, and then you're going to get a reaction, and then we're going to pump. So early days potentially, but it could come at any time, and you've just got to be looking at some things like this. Now, different people look at different sectors and have biases towards different sectors. I've always been a bit of a gold bug, so I do spend some time looking at gold mining stocks and stuff. But if you just build up a watch list of interesting stocks, all you've got to do really is wait until they start to show the setup you want to see. Okay, sentiment. Now here's another one. Here's another one that's displaying divergence, right? We've got a series of lower lows in what could be a completing diagonal. It's possible. Could be a diagonal coming in here. Lower lows. But here we've got higher lows in the RSI, higher lows in the MACD. Maybe this whole pattern's a running flat. You know, going back to 2010, maybe we've gone A, B, C, B, 1, 2, 3, 4, 5, 2 or 4, who knows, and then off we go again. So these are all just interesting patterns. Now this is just a result of not looking at charts which look like this, you know, which whether you're looking at Amazon, Google, Facebook, anything in the tech sector, or if you're looking at Tesla, which looks like that, you know, everyone's in love with stuff that's, you know, on the moon. You know, and they hate all this stuff that's down here in hell. Well, sooner or later capital's going to flow from the moon and fall back to Earth, right? And I guess you could think of all the underloved sectors, and this is just one. There's lots of completely underloved sectors. You could think of them as the Earth. Alright, now that doesn't mean I'm turning around and saying your giant tech stocks are not worth investing in, or that they're not the future, or that they are not massive, just companies that are smashing everything and winning everything. They are, right, and they're great investments. But that doesn't mean they can't become overpriced before going considerably higher, and that any such corrections to such large price movements could take years. So maybe the next decade will be one where flows move back into value away from growth. It's just an idea. I haven't got anything to really back it up. You know, just a thought. But yeah, anyway, that's all I really wanted to touch on. So here's a few examples. I mean, I cover Kinross Gold, Shanta Gold, Centamin, and Hochschild Mining. These are all big companies, small companies, different market cap sizes, and they're all displaying the same battered, beaten down charts, which do not reflect the value of the company, which do not reflect its debt to equity ratio, which do not reflect its price to earnings, which do not reflect its potential future value if such a rotation were to occur. So just something to keep an eye on. I would never ever recommend buying something blind and just hoping that it works. You need to wait to see the setup we want to see, but if it comes, then these could be potential interesting choices in this sector. So there you go, we've covered gold and silver, and we've done a few other things today as well. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave a comment in the comment section below, and as always, huge thank you to my patrons. I appreciate your support enormously, and looking forward to our live session tomorrow, where we've got a few things to discuss. So all the best, take care guys, and I'll speak to you soon. Bye bye.